Anyway, we have our expert, Congressman Scott Garrett from the great state of New Jersey, who's on the, I believe he's on the House Financial Services Committee and knows a lot about this. Scott, thank you for coming on.
And good to be with you. And you are right on both marks. It is the largest bailout. It is around $185 billion, and it is more than all of the other bailouts combined.
Yeah. All right. What a great factoid that is. Now, I'm sure you listened to the president's speech. I know you made yourself an expert into this and you're involved in the legislation. First of all, let's sort of set the parameters. Mr. Obama says he's going to get rid of Fannie Mae and Freddie Mac. Do you believe him?
I'd like to believe him. He's laid out the same proposal about 3-some-odd years ago before Dodd-Frank when he rolled out 3 different versions of it, and we've been waiting for his specifics ever since.
And what do these specifics look like now?
Well, we have no more specifics. Remember, back when Geithner was here, they rolled out a 3-option plan, one to do away with them entirely, something in the middle, and then to set up a third plan to set up a utility. We've been asking him for years, okay, Mr. President, pick one, and we'll work with you. He never has, and so now we laid out our bill, my bill, and he still has not laid out his specifics.
Let me ask you, I want to get to your bill in a second, but just let me stay with the president's speech and so forth. As I understood it, Scott, I was talking to Congressman Scott Garrett of New Jersey. Now, as I understood it, Scott, there's some kind of guarantees. You tell me, number one, they want to backstop 30-year mortgages. The government will backstop 30-year mortgages. Number two, there's going to be some kind of insurance fund or reinsurance fund to backstop certain mortgages. The fund would be filled up by presumably fees paid by participating banks and lenders, somewhat like the FDIC, the Federal Deposit Insurance Corporation, but I'm not sure. We already have the FHA, the Federal Housing Administration. What's that all? That to me sounds like the government would be playing a very prominent role.
Yeah, in one sense, it'll be no different than it is today, because at the end of the day today, the taxpayer, the government or the taxpayer, you and I, are on the hook if the system goes broke, right? That will be the exact same parameters under the new plan. You'll have an FDIC-type arrangement, but we all know that the federal government does not price risk well at all. They never know how to price, whether it's a flood insurance or whether it's any of the other myriad of programs where they price risk, where the GSEs in the past. They will be failing at that again, and so the next time the crisis comes, the taxpayers will ultimately be the ones who are responsible for it.
Just like the FDIC, let me get this metaphor right, because this is good. Just like the FDIC, if the FDIC fund, which guarantees your bank deposits and so forth, whatever, up to $250,000, if they ever went bankrupt, the government would bail out the FDIC. Is that not right?
Sure. So they have a line of credit with the government, i.e. the taxpayers. Now, they would argue, well, don't worry, because we can always claw this money back with the FDIC can from the other banks in the industry. But we know what their record is on this. Their record is in good times, the banks exert a lot of influence on the FDIC of what their premium should be and force them low, very low. And that would be the exact same thing with the housing finance industrial complex. They would do the exact same thing again and make sure that the rates or the premiums would not be appropriate, not actuarial sound.
All right, so the government will have a prominent role in this. Under this FDIC-type plan, what would private mortgage insurers do differently, and would Fannie and Freddie be gone? In other words, Fannie Mae buys mortgages. Lenders, private lenders, mortgage lenders, all right, give you a mortgage, whatever, a couple $100,000. They then bundle these mortgages together to create a mortgage-backed security, a bond stuffed with mortgages, hopefully better credit rating than what we had in the 2000s. All right, then they sell that to Fannie and Freddie, or that Fannie and Freddie puts their stamp of approval on it, which is a government guarantee, and they then, Fannie and Freddie, resell the mortgage security to investors, whatever, insurance funds, pension funds, and so forth. How would that change under this new Obama system?
Well, as you said at the outset, his specifics are not really there, but in the larger sense, not much. And there's the problem. there would still be ultimately a guarantee at the end of the day if the various layers of so-called protections are run through. So they would argue, hey, Larry, don't worry about it. We'll never be in this situation again. We're going to have, private mortgage insurance at one level. We'll require different capital requirements at a different level. But, the next crisis will happen, and those things can run through just as well, and eventually you get down to the bottom tranche, and that's the taxpayer.
And would Fannie and Freddie be gone under Obama, or would it have a different name, or what?
Yeah. That's exactly. I mean, if he has any wherewithal about him in his plan at all, he would say Fannie and Freddie are officially closed as of tomorrow, and then you would have Fannie Freddie 2 with this FDIC arrangement and guaranteed backstop. It would have a new name and a new organization and that sort of thing, but and it would not be I assume, a public-private partnership, but it would be Fannie and Freddie 2.
And all right, so it'd be Fannie and Freddie too. And would they set credit standards? I mean, part of the problem was as soon as Fannie and Freddie started loosening up credit standards for various affordability rules and laws coming out of Congress down through the years, especially in the 90s and late 90s, but George Bush was not immune to that either. Would they do the 20% down payment or 3% down payment? Would they do the credit specifications, the credit scores? Would they do the income verification? In other words, which agency would do that, or would that all be done privately?
No, it would still be the government. Look, right now they write about they are responsible for 99% of all mortgage securitization in the market. They're around 85% of the market in total. They would be still the elephant in the room, if you will, when it comes to mortgage securitization, and so they would be able to dictate all of that just as they are right now.
So we could have a massive bailout. Again, it's quite possible.
Oh, yeah, and that's we could very well be there again because despite all the best intentions of Dodd-Frank, it did not eliminate the next crisis. And so as you said at the outset, we've paid out $185 billion. That really is not being paid back, as you know. Even though they're making a profit right now, the way it's working, all their so-called profits are being swept to the Treasury, but that's not reducing the amount of money, $185 billion that they owe to the taxpayers. You might look at it as that's just sort of paying the interest, if you will, on it at this point.
All right, talking to Congressman Scott Garrett of New Jersey on Fannie and Freddie. Let's just one more thing. I want to go back to this so-called dividend payment and so forth, but what's this business about guaranteeing 30-year mortgages, some kind of backstop for 30-year mortgages that President Obama talked about? What's that all about?
Well, what that is about is any and every time you have a hearing on the topic of housing finance, anytime you sit down with anyone in the housing finance complex, the issue always is, are we still going to have a 30-year fixed-rate mortgage like most Americans have today? That's the holy grail, if you will, by some in the housing market. So President, of course, added that to his speech. And yes, if the government is going to use its wherewithal to backstop it, which it wants to do, they can guarantee any sort of mortgage you want, right? They can write it anyway with the specifications that they want, and so they will guarantee in writing that there will be a 30-year fixed available to all consumers.
So what's to stop private bankers from writing lousy 30-year mortgages?
Well, let's say, okay, so...
I mean, let's take... what was the big lender out in the West Coast?
Countrywide.
Yeah, let's take Countrywide. All right, Countrywide wrote, I knew Angela Mazzillo, Countrywide, which was good at one time, wrote a lot of bad paper. And they were encouraged to do so by Fannie and Freddie and by Wall Street. And their credit standards, crashed like everybody else. Just gave the stuff away, whatever. Affordability, whether you could pay it or not, was irrelevant. Everybody's got to have their own home. All right, so what's to stop that from happening again?
Well, very little, because the problem that we had in the past was what? It was a public-private partnership with Fannie and Freddie. They were privatizing profits, socializing losses, as you said before, and they were basically doing like any business would do, and that is to chase market share, right? And so they set the specifications for what they will insure, and so Countrywide was writing this stuff. There wasn't much oversight, and these were all being bought up by Fannie and Freddie. So it could happen again. This does not. The president's plan doesn't end what we had in the past and doesn't eliminate the possibility of it in the future.
Does it at least stop? And I think this is crucial. If you get rid of Fannie and Freddie, call it something different. The one thing that I always objected to down through the years was Fannie particularly, but Freddie later, developed their own portfolio, Scott. It's like they were running a hedge fund. In other words, they weren't just buying mortgages from the private sector and reselling them, putting their government guaranteed stamp of approval on it and reselling it to pension funds. They actually were buying it for their own account, for their own portfolio. And they had credit risk and interest rate risk, and when everything crashed, they crashed. Can we at least stop whatever new agency from developing its own portfolio?
Yes, we do two things. We will begin or continue on the shrinkage of the current portfolio by a rate of 15% per year, which just basically means that they have to be selling it off at a greater rate than DeMarco is doing right now, which is good. And secondly, going forward, say they can only have the new entity that does securitization can only have a de minimis the size of a portfolio once it gets down to the end. There is some need you can understand in any business that's doing securitization that you issue you're in the process of collecting the aggregation of the mortgages underneath, and then you're putting them into securities, and then you're selling them off. So there's some holding period for that, right?
Yeah, there's some. Right, there'd be some hedging. For short periods of time, you need to hedge risk.
Yeah,
but that's all.
That's all.
That's all. I mean, these guys had massive. They were like hedge funds.
Right.
Hundreds of billions of dollars in their portfolio. That was never in the original charter.
No, I guess they did a lot of things that were not in the original charter. And so that's why we want to do what the president says he wants to do, is to get rid of them, but honestly get rid of them entirely. We do it over a thoughtful period of time, 5 years, so there's no sudden shock to the marketplace. We give the opportunity to the private marketplace to begin to ramp itself up. I always say there's a wind-down phase and a wind-up phase, so we also put in mechanisms to help to facilitate the wind-up by making changes. I won't go into detail, to make things a little more certain in the securitization marketplace, which was not there before.
All right, two more things. We'll let you go. You're very kind with your time. First of all, will private mortgage lenders and insurers come back into the market now? I mean, as you said before, 99% is Fannie and Freddie. Will the private mortgage insurers come back into the market?
Short answer is yes. Long answer is we've had a number of hearings on this. I've spoken to stakeholders, been to Manhattan, been in Chicago. I've talked to investors who said, get the government out of the way, we'll be back in the market.
All right. So you think that'll happen under this new plan, this Obama plan?
Oh, Obama's plan? No. Wait. Whoa. No way. My plan, the Republican plan, Jeff Henschling plan, yes. But under the president's plan? No, I'm sorry, no.
Jeff Henschling's plan would get rid of Fannie and Freddie.
Yeah,
get rid of it.
You have to get rid of it, absolutely.
And would you have an FDIC insurance fund behind it? What's left?
No, that's the president's plan.
Right.
And I would never support that, because that ultimately has the taxpayer at the end. We want to eliminate Fannie and Freddie, eliminate any backstop, eliminate any FDIC arrangement. The only entity that should be out there, and it's still a sizable one, right, is FHA.
Right.
The FHA will be reformed down to do what its original mission was, first-time and low and moderate income homeowners, home buyers. It would be there still. And, of course, you'll have a plethora of other programs. The Fed will still be there with its monetary policy. Ginnie Mae will still be there. The federal home loan banks will still be there. There's about a dozen other federal programs that will still be there. You'll just eliminate GSEs, Fannie and Freddie, and anything connected to that.
All right, so that would be more serious privatization. Last one, Congressman Scott Garrett. Headline from the Wall Street Journal a couple days ago, Fannie to pay Treasury $10.2 billion. Actually, Fannie and Freddie are paying the Treasury quite a lot of money, which is helping to reduce the budget deficit. What's that all about?
Yeah, so whenever you have a monopoly that's backed by the government, it's pretty easy to make money, right? So that's why the GSEs have become profitable, and that's why they have money to start paying back interest or dividends, as you put it, and that's going to help to pay down the deficit. But we should not be in the housing market, finance market, as a way to finance the federal government by any means.
So this, right. Yes, right to that. But so the housing market is improved. Prices are going up. So presumably the value of these mortgage-backed securities owned or guaranteed by Fannie and Freddie, is that what's happening? The portfolio value is going up. So the mark-to-market is going up. And so you can hand over the notional improvement in the asset?
Exactly. And also Ed DeMarco, who's heading the FHFA, which oversees Fannie and Freddie, is also raising the G fees, the guarantee fees, which is a good thing to do. So, the revenue's coming in. Okay, so when you have a monopoly, you can raise the revenue, and that's part of it as well.
All right. If you had an outlook, is there going to be any legislation on this, Scott Garrett?
Yeah. So the legislation is called the PASS Act. Protecting American taxpayers and homeowners. It came after 10 years of trying, you might say. We got it out of committee a couple of weeks ago, and hopefully we'll be moving it to the floor in the fall.
All right, great stuff. Congressman Scott Garrett, Republican from New Jersey, on the House Finance Committee. A lot more work to do on Fannie Mae and Freddie Mac, and as Mr. Garrett has indicated, the House bill is really the one to get rid of Fannie and Freddie and open up the whole mortgage market to a true private sector free market approach. Thanks for helping very much. I'm Larry Kudlow, everybody. We're at 888-583-5692. Come on back. Take call on this if you want.